Welcome, tech enthusiasts, to the Thursday edition of Tech Stocks Daily. Today we've got a stellar lineup. Google's teaming up with NBCUniversal to bring AI-powered magic to the Paris Olympics. Infosys is making waves with dazzling earnings that sent their stock soaring 9%. And MongoDB struggles amidst a storm of legal battles that could change its financial future. Plus, we'll see if it's too late to hop on the meta train, despite new ETF playground. Buckle up for a whirlwind tour through today's most sizzling tech stock news. All right, folks, let's dive deep into the Googleverse, because today, there's a buffet of news all revolving around our lovable search engine powerhouse. First off, what pairs better with the Olympics than some good old artificial intelligence? Alphabet's Google, NBCUniversal, and the U.S. Olympic and Paralympic Committee have announced a sci-fi twist to the U.S. broadcast of the Paris Olympics. Google is rolling out its AI to assist sports commentators in explaining all the competitions. Now, we've all had those what just happened moments while watching synchronized swimming or fencing, and Google's AI swoops in as the high-tech lifeguard. It can pump out quick answers to complex sports questions on fly, practically making every commentator an instant genius. Plus, sports enthusiasts will see personalized, AI-generated daily recaps narrated by digital clones of favorite commentators like Al Michaels. With the younger generation glued more to their smartphones than TV screens, this could be a game-changer for Olympic coverage. But we're just getting started. Let's flip the page to a thick file in the drama department, where Google is tangled up in not one, but multiple legal issues today. Over in India, justices of the Supreme Court are suiting up for a judicial smackdown. The apex court will hear cross-pleas between Google and the Competition Commission of India in September. The CCI had slapped a hefty fine on Google for some not-so-friendly competition tactics with its Android mobile devices. While the National Company Law Appellate Tribunal upheld the fine, they did chuck out some of the more extreme conditions, like forcing Google to host third-party app stores on its Play Store and not pre-installing a bouquet of Google apps. Oops, guess they're not getting out of that penalty box anytime soon. As if that wasn't enough, Italy is stirring the pot with an investigation targeting Google's data linking practices. The Italian Competition Authority suspects that Google might not be entirely above board when it asks users for consent to link data across services like Search, YouTube, Chrome, and Maps. Allegations of insufficient and misleading information about the consequences of such consent are causing major side-eye towards Google. This investigation runs parallel to new directives spurred by the EU's Digital Market Act and Digital Services Act, aiming to safeguard users' personal data like diamonds at Tiffany's. In product updates, Google rolled out some magical enhancements to its Gemini AI on Android. Previously, asking a question on the lock screen was like talking to a wall. Prompts for questions now shoot straight to answering mode without breaking that blissful unlock barrier, helping users satisfy their curiosity without strain. One tap, and Gemini insists on authentication before any detailed typing or adjustments. It's a practical magic show designed to make your dumbfounded why moments even simpler. And now, let's rewind from the corporate boardroom to social buzz, MrBeast style. No, it's not Google News per se, but worth a mention given its YouTube ties. Content creator Jimmy MrBeast Donaldson stirred the pot by posting cozy pictures with comedian Kevin Hart, leading to rampant speculation of a collaboration. It's the meme fuel supply line we didn't know we needed. So, there you have it, folks. Google had a full plate today, from AI milestones and young audience targeting in sports, to some hearty legal uncertainties and a sprinkle of social stardust. What's next? Maybe Google walking your dog? Who knows? Stay tuned, keep those questions coming, and we'll keep answering, just like Gemini, but hopefully sans the consent drama. All right, tech enthusiasts, grab your virtual surfboards because we're riding the info wave today. Let's talk all things Infosys, which made some serious buzz on the NASDAQ. Infosys, India's IT bigwig, definitely gave investors something to celebrate with its latest earning bonanza. And trust me, it's the kind of news you wouldn't want to glaze over during your morning coffee. First things first, Infosys stock pulled off a Herculean feat by leaping up by 9% as of 1:10 p.m. on Thursday. Why the jubilant jump? Well, Infosys reported some rock-solid earnings for its fiscal Q1 2025. Analysts initially thought Infosys would rake in a nice 18 cents per share on sales summing up to $4.65 billion. Infosys channeled its inner overachiever and not only met the earnings target perfectly, but also clocked in $4.71 billion in sales, beating top-line expectations. But wait, there's more. Sales growth in constant currency terms was 2.5% year over year. A modest feat, but still more than what the Wall Street geniuses had forecasted. Infosys owns bragging rights with a solid 21% operating profit margin leading to significant gains in earnings, 7% in rupees and 5% in dollars. Talk about stacking up those digital coins. The cherry on top, Infosys reported generating a whopping $1.1 billion in free cash flow in Q1, marking a colossal 57% increase over the same quarter a year ago. That's 43% more than the reported net income. Analysts' eyes might be popping out of their sockets right now. Speaking of a promising near-term outlook, Infosys also finessed its guidance game. They're forecasting a 3%-4% bump in sales growth for this year. The company expects operating margins to stay strong at around 20 to 22%, indicating that the earnings trajectory should stay in the upper single digits. A heads up though, most analysts are keeping their future expectations in check, predicting a more modest long-term profits growth rate of just 7%. But hey, when it comes to valuation, Infosys seems to be tightening its belt. Although stocks look slightly cheaper based on free cash flow metrics compared to their PE ratio, many pundits wouldn't exactly call it a steal given that long-term projection. Continuing the win-run spree, Infosys celebrated its highest free cash flow ever recorded in the first quarter. What's really setting eyebrows north? Infosys notched up 34 massive deal wins with a total contract value of $4.1 billion, out of which nearly 58% were brand new contracts. Now, that's what I call brand appeal. On another sizzling note, Infosys hit its 52-week high just before the earnings report, with shares soaring 1.90% intraday to Rs 1,758.60 on the BSE ahead of quarterly results. Before the official announcements, analysts expected Infosys to lead the pack in growth stakes among Indian IT giants, thanks to multiple mega-deal ramp-ups and a favorable growth base. Rounding it out, Infosys plans to hire up to 20,000 freshers this financial year, both on and off campus. This move is aimed at reversing a 6-quarter headcount decline. The company ended the June quarter with a headcount of 315,332, noting a year-on-year drop of nearly 21,000 employees. So that's the 411 with Infosys today. All of this combined made for a sensational splash in the tech waters. Stay tuned for more updates. Well, buckle up, tech enthusiasts, because today's big headline is a whopper. MongoDB, the renowned database company, is in hot water, facing a triple whammy of legal actions and investor scrutiny. Let's break this down, shall we? First off, MongoDB is dealing with a securities class action lawsuit led by Higgins Berman. Investors claim they were misled about the company's financial health due to some controversial changes in MongoDB's sales incentive structure. Back in 2023, MongoDB decided to shake things up by retooling how they reward their sales team and reducing pressure on upfront commitments from customers. Sounds like bold strategy, right? Well, it backfired. The company had to lower its fiscal year 2025 revenue guidance twice, once in March and then again in May of 2024. Investors weren't exactly thrilled, and as a result, MongoDB's stock took a nosedive, erasing an eye-watering $7.5 billion in shareholder value. Yikes. Higgins Berman argues that MongoDB executives painted a rosy picture, saying everything was under control and that they had reliable information on future revenue and growth. However, the lawsuit alleges that management actually downplayed known risks from macroeconomic factors and their own sales incentive shakeup. Basically, it boils down to accusing the top brass of knowing their ship was sinking while telling investors it was smooth sailing. But wait, there's more. Faruqi & Faruqi, another leading securities law firm, has thrown their hat into the legal ring. They're also investigating potential claims against MongoDB, urging anyone who bought or sold stocks or options between August 2023 and May 2024 to get in touch. Like Higgins Berman, Faruqi & Faruqi is looking at those two occasions where MongoDB slashed its guidance, leading to dramatic stock drops. And in case you thought that was the end of MongoDB's woes, think again. Claims filer reminds investors with hefty losses, $100,000 or more, that they've got until September 9th, 2024, to file as lead plaintiffs in this securities class action. Claims filer working with Kahn, Swick & Foti LLC echoes similar accusations of non-disclosure and deception. When MongoDB revealed less than stellar growth expectations in May 2024, the stock price plummeted by nearly 24%. This service aims to help retail investors get their piece of the potential settlement pie. So, in summary, MongoDB wanted to revolutionize its sales structure, but it turned into a messy experiment that sparked significant financial losses and legal battles. Stockholders, feeling left out in the cold, are coming back with a vengeance through multiple lawsuits. Whether MongoDB manages to regain investor trust and stabilize its stock price remains to be seen. In the meantime, it's a popcorn-worthy saga for us tech news buffs. That's the scoop on MongoDB for today. Now, go impress your friends with all your insider knowledge. All right, tech enthusiasts, let's dive right into today's whirlpool of meta madness. Meta Platforms, the artist formerly known as Facebook, was turning heads in the tech news realm with some juicy developments about their stock and their diversified strategies. And trust me, there's enough drama to keep you on the edge of your seat, popcorn included. First off, we took a deep dive into whether it's too late to jump on the Meta Platforms train. Meta hit the NASDAQ like a rock star back in 2012, and it's since grown by a whopping compound annual growth rate of about 23%. That's like planting a money tree in your backyard and it turning into a majestic cash-spitting fountain. But the big question looming overhead is, have we missed the gravy train? Well, Meta's got a robust 3.24 billion daily active users as of Q1. Billion with a B, folks. That's nearly half the Earth's population scrolling through Facebook, WhatsApp, and Instagram daily. It's a juggernaut in the digital universe, benefiting immensely from the network effect. Whether you're stalking your cousin's vacation on Insta or running an ad campaign on Facebook, Meta is omnipresent. And let's not underestimate their diversified revenue streams. Advertising might still be Meta's bread and butter, but AI initiatives like Llama AI, short-form video craze driven by Reels, and even the mysterious frontier of the metaverse are new love letters for future growth. They've even dangled the shiny lure of dividends. Can you imagine getting paid to stay loyal? However, Meta is not all sunshine and unicorn rides. Enter stage left, the new bad boys in town, Directions METU and METD ETFs. These financial ninjas let traders bet on Meta's tumultuous price swings, with METU enabling a bullish double exposure and METD letting the bears have their day in the sun. Basically, you can make money whether Meta stocks are flying high or plummeting low. Intrigued? Maybe you should be. Presidential candidates making geopolitical discourse might impact tech stocks too. Donald Trump suggested Taiwan pay the US for defense. Gulp. Talk about some spice. Wall Street analysts are torn, but overall, the bulls are still charging ahead for Meta, despite the drag of top-tier tech's volatile pressure cooker environment. So what do you guys think? Is Meta Platform still a hot stock, or has its fiery potential cooled down? Will the AI and ad evolutions propel it back into stock market stardom, or is this tech giant running out of steam? Or, drop your comments and let's get the conversation rolling down below. We want to hear your takes on Meta and the whole ETF nitty-gritty. To invest or not to invest, that is the question. And if you've dabbled in Me2 or METD, we want to hear all about those roller coaster rides too. Hit those keys and let us know your thoughts. Right, enjoy your news and stay tuned for more tech confetti tomorrow. All right, tech aficionados, put on your stock market helmets because we're diving deep into one of today's headlining stocks, Infosys. With all the spicy news, I'm going to give you my take on whether it's a buy, sell, or hold. So let's break down the Infosys fiesta. The stock had a raucous 9% upsurge on Thursday. Now, if that isn't a party for your portfolio, I don't know what is. The company crushed expectations in fiscal Q1 2025, with earnings exactly hitting the mark at 18 cents per share and revenue cruising past forecasts at $4.71 billion. Cheers to that, right? Now, why would I be bullish on this stock, aka suggesting a buy? First off, let's talk margins. Infosys has an impressive 21% operating profit margin, which is like sniffing out gold in the tech business. They also clocked a massive $1.1 billion in free cash flow, up a whopping 57% year over year. And don't forget their optimistic future outlook, projecting a 3 to 4% rise in sales and sustaining strong operating margins between 20% and 22%. Moreover, hitching future growth expectations on solid fundamentals while snagging 34 massive deal wins worth $4.1 billion seals the deal for me. A great sign is their highest ever recorded free cash flow, outlining a picture of robust financial health. Additionally, they're hiring 20,000 freshers, combating the recent headcount decline and building future talent pipelines. Definitely laying stepping stones for sustainable growth. However, here's the disclaimer segment. Infosys stocks, while glistening in free cash flow earnings metrics, aren't a bargain for long-term holdouts who are cautious about a relatively modest 7% growth rate prediction. An analytical glass should hover over this factor for those eyeing longer horizons. So, would I buy, sell, or hold? I've got my virtual confetti ready for a buy. Stable margins, strong cash flow, promising projections, and confident deal wins make this stock glitter. But here's where it goes Serbian. Always do your research. Dig into the fundamentals, assess risks, and compare to your overall investment strategy before making moves. Sound good? What do you think? To buy or not to buy? Share your thoughts, and let's keep the stock saga talking going. To wrap things up, today's market has been a symphony of highs and lows. Google dazzled us with AI-infused Olympic magic while wrestling with legal dramas from India to Italy. Infosys showed us the money with stellar earnings and explosive cash flow, making a strong case for bullish investment vibes. Meanwhile, MongoDB navigates troubled waters with multiple lawsuits hanging over its head, and Meta continues to be the stock market's roller coaster, packed with potential and perils. Like what you heard? Don't forget to smash that like button, subscribe, and share this video with your tech-savvy friends. And remember, set a reminder because you won't want to miss tomorrow's bite-sized tech update. See you then.